afternoon, everybody. Welcome to Afternoon Market Action. My name is Glenn,
My name is Patrick.
and we're going to be your host for the next hour or so in regards to what's going on in the market. So glad to have you here.
I'm glad to have you here,
Us, by
Glenn.
all means, please respond in the affirmative to let us know that we are coming across loud and clear, because we're going to need your participation today. We're going to probably ask some questions that are on everybody's mind in regards to the CPI number that came out today. It was a big mover for the market. The market liked it. And the market took off from it. Patrick and I both have our opinions on what's going on and what to look for. You guys can still make your own decisions, but that's what we're here for. We're here to at least take a look at some of these things. Why is Jim Penner written under Patrick? That's all.
Now I'm no name. I am he who shall not be named.
He is incognito. That's what he is. He is incognito. But Patrick, Joey is fixing that up. All right, so we got our people here from YouTube. We got our people here from Facebook. Claude says Patrick is Jim Penner. I know, Claude. We're working on it. It's all fixed now. It's all Patrick. So there you are, Patrick. You are your own individual person today.
Yay.
All right. Tell me, let's start off before we get into the CPI number. Everybody knows that CPI came in still hot, but lower than the previous month, okay, or the previous number. How many of you feel good about the number, and how many of you don't feel that the number is still a good number? So either put good or bad. All right, let's start off. Let's go see where your heads are before we start chiming in on the CPI number. How many of you say good? How many of you say bad? And we'll go start off from there. And also, just quick house cleaning. If you're brand new to the channel, don't forget to hit the subscribe button, hit the bell icon, so you'll be alerted when new videos like this come out. If you like the content, don't forget to hit the like button. But bigly, share this link and share it now. Share it now while it's live. Get people into the room. So that's going to be huge for us. We get the people into the room. We get to give them our insight. They get to hear it from your social circles as well. All right. So Patrick and I can both read the screen. We've got a lot of good. Joey, put up a poll. All right, put up a poll. Let's go get a percentage. But I see Lee says good. The market speaks. Inflation still bad. Comes from Martin. Halal is here. Good afternoon. Good midday afternoon. That comes from Stowe. I'm mobile again today. There's Mark. Mark, I'm glad to have you here, my friend. All right, so Joey's putting up a poll, and I'm very interested in hearing what you guys have to say before Patrick and I get into it. I'll start off by saying, do you think the CPI number was good? And you put yes or no. Or do you think the CPI number was good, yes or no? That's what Joey's setting up as the poll. You took away the chat, though. Oh, okay. Personally, I think that the CPI number coming in lower than it was previous is a good thing. The bad thing about it is inflation is still high. The other side of that is it's going to keep the Fed more hawkish in raising interest rates. But there's the other side of it. If inflation is falling, does the Fed continue to stay hawkish? And I ask that question because if we get to a point where he's got to cut interest rates again, he doesn't have any wiggle room to the downside. He's still got to raise interest rates, and I still think it needs to be somewhere between a number of 4 to 6% in order to have some wiggle room if he's got to stimulate the economy by dropping interest rates. Right now, he still doesn't have a lot of floor, or he's very close to the floor. So that's my 2 cents on the issue. Patrick?
I mean, I agree with you in that statement. We just saw Fed member Evans come out earlier today stating that they expect to have interest rates at 4% by next year or throughout next year. I mean, I think it's definitely the fact that it's still at 8.5% is definitely not good. That means inflation is still extremely high, especially compared to what their goal is of 2%. But at the same time, it's, that whole mentality of it's not as bad as what everybody is expecting. So while it's not great
So the
news,
market responded because of that, right?
exactly, it's not great news, but it could have been worse. And so it gives hope that there's, into this high inflation in sight, but until we until we get more than one data point, I think it's still going to be anybody's guess. You know, Dr. D states time and time again, one day doesn't make a trend. One data point does not make a trend. So I don't think you can necessarily call it the peak of inflation, but you're going to see a lot of people on TV trying to pump that narrative that, inflation has peaked, everything's good, moving on to a new bull market. So this is the time to be fearful over more so, exuberant with your investments, I think.
And to go right along with that, don't be afraid to take what the market gives you, but don't get complacent. All right, don't get complacent. And you know me, and Patrick is along with me. We don't like to put politics into this, but wait until after the midterms elections are over. I think then the market's going to rear its ugly head, because by that time, everybody's going to be in place, whether Democrat or Republican, blah, 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 blah. Then the market's going to say, all right, let's go. I think the market's going to pull the rug from all up under all of us. And it's just going to go bat crap crazy.
I mean, I still feel like the guidance we gave last week, the statement I've been stating for the last couple of weeks still holds true. Treat this as a bear market rally until we see signs that it's, not.
I agree with that. 110%.
I think that's the best way to approach it.
Yep. All right. So let's get into some news from that. And let's get to the first one. So we're going to get into the first one. Okay. There we go. U.S. inflation slows by more than expected in July as the Fed eyes future rate hikes. Again, I'm interested in knowing if we really feel that inflation is peaking and inflation is falling, does the Fed still stay hawkish? Someone typed in here that they're talking, that was Ravi, says they're talking about the possibility of a 50 points raise instead of a 75. And then Ravi came along back around then and says, I still think that they'll go with 75. Asif says, people just want a reason to invest. You know something? I don't disagree with that. People do, but there's a difference between people wanting to have a reason to invest and investing for a reason. Let me say that again. There's a difference between people wanting to have a reason to invest than to invest for a reason. We invest for the reasons of growing our portfolio. We don't want to just have a reason and go, hey, okay, it's time to go and go. So I think that there's a difference between the two. Dan says this data point will fuel talk of policy pivot. But for me, the issue really does boil down to the labor market. Wages running red hot and absent a turnaround in productivity. Part of a real recession is high unemployment. Patrick, we still don't have high unemployment, right?
That's correct.
So I've been saying for the longest time that something just doesn't feel overly right about this market, and it still doesn't. When you even have glum news about high inflation, but it's lower than it was, let's go buy stocks. That doesn't make sense. The market's inflation is still high. We're still raising interest rates. Oil supply, all of that is still an issue. It really, really is. So we ain't got nothing that's really pushing this market higher except for people wanting to have, just like Asif says, people wanting to have a reason to invest in the market.
So Glenn, one thing we haven't really talked about, or one scenario we haven't really considered, and I want to get your thoughts on, is okay, if unemployment stays where it's at, we see, inflation start going down. Maybe this could be, do you think it could be a good balance of where the Fed raises rates still throughout next year, just at a slower pace, a lower pace, not right or hiking them up as fast? And that way he's still slowly raising rates, but, at the same time, doesn't really mess with the jobs or inflation?
I like that question, in that I don't, even though we're getting into inflation that looks like it's pulling back, I think the Fed still has to raise rates. maybe if he cuts back, that still gives people more of a reason to think that, oh, maybe the Fed is getting more dovish. It's time to buy. It's time to buy. It's time to buy. But he's still raising interest rates. And maybe not affecting the job market, I think is a good thing. But he doesn't have to affect the job markets, or he will do it indirectly. If the rates keep going up, even if they're at a slower pace, if the rates keep going up, still makes it harder for companies to borrow money because they're going to have to pay it back at a higher interest rates, which takes money out of their pockets, which takes money out of the bottom line, which is going to piss off investors. So what are they going to do? And this is how the Fed can inadvertently go after the job market. Companies are going to start cutting jobs anyway. All right. And if that happens, he inadvertently got to where we need to be from where we are from the job market to automatically have the job market sort of kind of tank. That's, I think that's the best way for me to answer your question. I think that he's still got to raise interest rates, just like you just said. It needs to be higher than what it is right now in order for him to be able to stimulate the economy again when the time comes. And I think that, even more so by doing that, he's going to affect the job market that way. So it's not him directly doing it. I think a roundabout way that'll happen.
Wait and see.
Yep, that's it. I was waiting for you to say something, and you were like, okay, we'll wait and see. And I'm with you. We got to wait and see. All right, let's get to the second story.
What the hell's going on with inflation?
I hear you. Fed delivering, here it is, Fed seeing delivering a 0.5 point rate hike in September as inflation eases. And I think that gives people another positive reason to buy stocks, even with the overarching bad news. Someone says news doesn't move the market. It is the interpretation of the news by all market participants. No, news does move the market. And sometimes the news should move the market in one direction and it doesn't, because just like you just said, Kamel, it's the interpretation of the people. And Patrick and I were having this conversation earlier. Because of the midterm elections coming up, this could be spun as, hey, it's getting better, folks. Let's go. Where we take out the fact that it's still 8.5%. I think we lose. But that's real. So, Kamel, to a certain degree, it is the interpretation, but also to a certain degree, it is the news. All right. So we'll put that all together. All right. Joey's got the poll going. Nart says, are we talking about Nancy today? Why am I talking about Nancy? If it's
Nope.
If it's political, I ain't doing it. No. Nope. All right, let's get to the next story. So that's the majority of the take on the CPI number. Joey's got the survey up, the poll up. We're going to take a look at it and see what you guys think overall. Here's another story. Actually, that you did take out a story, because 1, 2, 3, 4. No, you didn't. That's just up there twice. So I'm going to take this one off. How about adding to an already crowded space? Walmart explores adding streaming video to Walmart Plus membership program. Patrick, what do you think about that? I think the space is already crowded.
I think this is a terrible idea.
Okay.
Well, like you said, it's already overcrowded, but come on, let's come up with some new ideas. It's like, we can't think of any ways to really, rejuvenate our business, make it unique, and make it or stand out from the crowd. So let's just go with what everybody else is doing and throw some content on our website now. I mean, nobody goes to Walmart.com. People go to Amazon because Amazon's been there. People have already, had that behavior and habit drilled into them, but Walmart, I mean, whenever you hear people talk about going to Walmart, they go to the actual store. They don't go online typically. So Walmart trying to turn into the next Amazon, it's going to be a hard uphill battle that's going to cost a lot of money. And if that money, I don't know if that money spent is going to necessarily justify the means or the end game of where they get to. So I think it's going to be too expensive or too much overhead cost to try to get to where they're trying to become or where they're trying to go.
it says that they held talks with Disney, Comcast, and Paramount about adding one of their services as a perk. If I'm Disney, Comcast, or Paramount, why would I want a competing service added to my service?
Well, that was like Netflix back in the day. Netflix, they used to have all the rights because they were the only streaming service out there. Now every single person, every single TV company or TV channel, retailer, anybody now has their own streaming service. It's only a matter of time, and I saw a meme that's very, very pertinent to this one. It's only a matter of time until somebody takes all these different services, bundles them up all together, and reinvents cable.
And then shuts everybody out. Everybody will go to Glenn and Patrick's streaming service. It'll be us, and we'll have everybody, and everybody else will lose out. All right. Stowe on Facebook says, that sounds like a shot in the dark. Walmart has definitely failed me. He pulled out last year. Actually, Ken puts up a statement on Facebook. Glenn, you are great. I should have just stopped there, but no. It says, however, you talking about all the bad news in the world and your fear in your voice today about the market. However, VectorVest is buying. Did I sound fearful in my voice?
Yeah, you always sound fearful.
Whatever. No. So, Ken, let me go back. You'll hear me say it over and over and over again. Take what the market gives you. I'm just giving you the facts behind the scenes. I'm with you. As a matter of fact, from this story, before we finish the other stories, let's go out to what's going on in the market. All right. The S&P is up. Our composite is up. Oh, so don't get it twisted, Ken. The market's going up. By all means, take it. What I'm saying is just don't get complacent. There's a lot of things. I just put out a video earlier this week about the market turning over. I gave you signs of what to look for. But the market's going to do what the market's going to do no matter what I think, no matter what Patrick thinks. So as a content provider, I think it's incumbent on both Patrick and I to never discourage you from buying unless the market's just getting killed and you're still buying stocks. And I'd sit back. I think Patrick or I would sit back and go, what the hell are you doing? But that's not the case right now. All right. So I am never fearful. If I ever sound fearful, that's weird.
And Glenn, will you go to the homepage and check the MTI for me real quick?
Sure. There it is, 1.52. Getting to that point, but not there yet.
Not there yet, but
not
getting
there
close.
yet. So Ken, everything that Patrick and I would ever talk about, especially when the market is still going up, we're giving you insights of things to look for. So are you selling fear or VectorVest software? I'm never selling. You will never hear me sell fear, baby, ever. I'm just up. I'm forthright, and I'm honest.
Hold on. What's the margins on selling fear?
Say again.
What's the margins on selling fear? Because if they have higher margins, man, we may want to choose that option.
No, I'm not. No, listen, you will never hear me sell fear on any video.
Maybe
I'm
we're
only
doing
giving
this all
you
wrong,
the insights to help you guys to make decisions. You notice, Ken, I never push anybody in any direction ever. I just let the program do its own deal. I show you what's here, but I'm not afraid to show you what's going on behind the scenes. And I think that is the way to go. Kamel says it's not a competing service. Walmart could give a boost to Disney or Comcast. Really? I'm not sure I follow that. Do you, Patrick?
I mean, it could be like, when you go into Sam's, they have the AT&T person there trying to sell you AT&T. AT&T is getting some sort of kickback or at least a percentage of those sales that go on there. So it could be like that. Like, hey, you sign up through our website or, wherever, and you get access to it, but they get a cut or they get a kickback for it.
All right. And Michael says, which oil company should I buy under $12 range? I like SJT. I hate giving out my own picks, but I like SJ. I like San Juan Basin. It's a royalty, but that's my energy play at this particular point in time. If you sell fear, you will be like the talking heads on TV. And let me ask this question, and then this is going out to you as well, Ken. Does anybody feel like we are, like Patrick and I are like the talking heads on TV at all? Type of 1 if you believe we are. Type of 2 if you don't. and honest answers. And nobody's getting berated if you answer with a 2.
But you better answer with the 1.
You better answer with a 1. Listen, folks, that's why you come here. Hopefully you come here to get away from what happens on the regular TV stations. What is it? What did I say? 1 if we act like them, and 2 if we don't.
All right, hold on. I'm gonna write these names down real
quick.
No,
don't do that. Don't do that. All right, some on TV are very good, however. I don't disagree with that. Now, the people that said the CPI number was good, 63% of you said yes, and 36% of you said no. And that's all right. I just put it out there as a question. John says, you guys are better, way better than the talking heads. You tell it as it is. And Ken, that's exactly what we want to get across. So you'll never hear me self-feared, my friend, ever, ever. You'll never hear me self-feared. All right, so with that, let's get back to the stories. I wanted to just touch on that. Here's Patrick's story. Novavax sinks after having sales forecasts on low vaccine demand supply gut. Talk to him, Patrick.
Yeah, so, I mean, we called this, what is that, 2 months ago, whenever the World Economic Forum was going on?
You brought out a story about that.
Yeah. Moderna came out warning everybody already that they had to dump 30 million doses that they just couldn't sell. Well, here's another one. Now, all of a sudden, this one's actually affecting the bottom line. And that's what we were worried about is, if they're nobody's buying these vaccines and they're going to have to just dump them, that's a whole lot of money they're about to lose out on. So, this is just the confirmation of what we were warning people about, what we were talking about. So this really shouldn't come as any surprise. There's going to be the biotechs out there that have other avenues of, revenue coming in, other opportunities, other vaccines or whatever, medications. But if your primary focus is on the COVID-19 vaccine, looking at playing these to the downside could definitely be a nice money-making opportunity here.
All right. For people who are, Rodney says 3. I didn't give a 3. I said 1 or 2. For those of you who are asking for your individual stocks to be looked at, after every session on Afternoon Market Action, whether it's me or it's Patrick, we put out a call to you guys to see which stocks you guys want us to look at the next week. We only got 4 stocks to look at. Michael, CPG wasn't in that list for us to take a look at. And Stowe, Wire wasn't in that list. Folks, we give you a whole week to go put in stocks for us to look at for the next week. If you don't put it out there, we're not going to do them. This is the way that we can set aside time for your individual stocks. So I'm going to answer that for everybody who's going to put out individual stocks for you to look at. All right. John says, that was a good call, Patrick. I remember you saying that. Great call. Patrick's a smart guy.
Appreciate that, John. Appreciate that.
He's a smart guy sometimes. Not all the time.
Sometimes.
But sometimes he is. I think Novavax came late to the party after we had the 2 main drugs that are out there that made a ton of money. But it is what it is. I like the story, Patrick. You know me, I'm in the EV space. I think I go home and sleep and dream about EVs. But anyway,
I just find that really funny. You drive the most inefficient or unfuel efficient car out there.
Actually, I don't drive it very often, but I do. That's why it stays at home. Actually, I went to go start up the Excursion the other day, and it went because I hadn't started it up in a minute.
Yeah, the irony in this is absolutely epic.
I gotta go jump it, and then I probably got to get another battery.
Hey, you should use a electric vehicle to jump it.
Yeah, that's exactly what I'm going to do. I'm going to use an electric vehicle to jump my 8-cylinder vehicle. All right, plug misses estimates. Analysts remain bullish due to IRA catalyst. I still think that the bill that's out there to build up the whole infrastructure, to build up the infrastructure for charging and all of that stuff, I think this space is still going to be fine. All right, they missed estimates, but you can see analysts remain bullish. I'm still bullish on the clean energy space right now. I think it's to a point where we can't not be because it's being pushed down our throats. I might have gotten a little political there, but it is what it is. And, I still think that it's a good spot to be in. Michael says, Glenn, you made a comment last week on CPG. I didn't hear because I had a phone call. What did I say about CPG? Did I like it or didn't like it, Patrick? It was one of the stuff. I don't remember what I said. That's why you got to be
But whatever
here.
You said was very enlightening.
Okay, thank you. Patrick said it was I don't remember what it was, and I apologize for that. But I do. I'm sorry, but I did analyze it. All right, next story, real quick.
And watch the vids or the VODs.
Tell me what you think about this. Boeing, after all the bad PR because of the Dreamliner, FAA says the 787 Dreamliner deliveries could resume in the coming days. That's going to be big for them. That was a big ticket item for them to sell. I think it could be a positive thing for Boeing as long as the planes don't crash. I know that's a horrible thing to say. It really is. And if I offended anybody, I apologize. But this is a big ticket item for them, and people want it. And the FAA says you're clear, you can sell it. I think that this could be a good shot in the arm for Boeing.
How many times have we gone through this? This feels like Groundhog's Day.
That we're gonna, hey, it's gonna be good. Oh, bad PR. Hey, it's gonna be good.
And then the plane crashes.
And see, that's
we got this time. We got everything under control.
Horrible.
This is gonna be awesome. 5 minutes later, planes burning on the ground.
I think that it's a positive thing for it. Rodney says excursion, just the name implies a land yacht. Yeah,
I like that one.
It's a freaking land yacht for sure. It's, I can put my family in there. I could probably put 2 families and rent it out when I'm not driving it. It's huge. It's really huge. All right. So I think that this is a positive sign for Boeing. We'll take a look at the stock, deciding if it's something.
I'm gonna get a Pirates flag and put it on top of the excursion next time you drive it into work.
You're gonna put what?
A pirate flag. Make it look like a yacht.
Yeah. And then I need cannons coming out the back window. That'd be great. All right. Here's another stock that I like, Devon Energy. Denver Oil Company sells to Devon Energy for $1.8 billion in a deal. Again, you guys know I still like energy. Devon's a stock that's been on the top of a lot of people's lists. So this is one of my picks today as well. Anything you want to add to that, Patrick?
I mean, energy has been a rough one over the last few weeks, but I'm still, there's always, with all this stuff going on in Europe right now, there's always a chance. I mean, you could wake up tomorrow and energy is going to be skyrocketing. So
okay. I agree with that. I totally agree with that because the energy story hasn't changed.
Yeah.
Low supply, high demand.
And especially going into the winter months. Well, certain types of energy going into the winter months is going to be bad.
All right. Bob says, I'm going to have a busy day on our live day trading room tomorrow, Jockey Club. Steve bought into DACO Energy, SMCI, I think it's a chip company, Mara, which is crypto, Sun W, which is clean energy, Nucor, which is steel, Enphase, and AXTI. Oh boy, I'll be managing those trades tomorrow. That's what, 1, 2, 3, 4, 5, 6, 7. Hopefully he's got stops on them.
Dude, last week when I got into the Jockey Club, the portfolio was completely filled up with stocks, and I had to sell a stock because I had no money to trade with.
It was like me. There was one I went to another. We got 2 other portfolios for day trading.
Now we do. We didn't last week, though.
I did. Sure did. Oh, I know I had at least one. I don't know if we had 2. I know I had at least one. All right. So that's going to be good for our day trading room tomorrow. All right. Where are we at? 2:30. Beautiful, beautiful, beautiful. All the stories are done. Now let's concentrate on the stocks. All right. We'll go up to the viewers tab. Let's go take a look at both the spiders and the VVC. And let's go do some good analysis. Remember, Patrick was absolutely right. One day is not a trend. All right, so let's look at today. Here's the S&P. Market's up. Look at the candle for the S&P 500 today. Are you guys like super, wow, ready to back up the truck? Type a yes or a no. Look at the candle. It's called a doji, where there's not a lot of movement in price for the day. Are you guys super excited with the news and with the big move? Look at the candle. The candle is telling you exactly is. Now, Stephanie says maybe tomorrow. All right, that's true. Patrick, what do you think about the news the reaction in the S&P candle?
I mean, well, looking at it right now, first and foremost, I say this time and time again. If you're going to be looking at a swing trade opportunity, you want to typically wait towards that last 30 minutes, 15 minutes of the session. That way you have almost as much data as you could possibly have to make an informed decision on.
You have access to the graph if you need it.
I haven't even had that screen pulled up. So what I mean by that though is, while yes, right now we are close to a doji, there's still what, an hour and a half left of trading?
Yes.
Markets could have an afternoon late night or, late run.
A late night snack?
Which would change what this is showing right now. So as a doji, yeah, it's not the greatest look, but at the same time, day's not over. So I would wait to see how that actually forms closer to the end of the day. But a lot of people have been calling 4,200 on the S&P is the most likely short-term top. And what are we at right now? 419.
Yeah, so we're right there.
Yeah, we're right at that major level there.
Hey, go to the next graph. Should be the VVC. There it is. Now, look, that tells a different story today, doesn't it?
Yep.
Why is there such a difference? I'm going to let you answer the question for all the new people in the room. Why is there such a difference between our VectorVest composite and the S&P 500?
Because it's not just looking at a very, very small subsection of the market.
Okay.
It's looking at 9,200 stocks rather than just 500 stocks.
Okay. And that's for the benefit of the new people in the room, because that candle is a lot bigger, a lot more open than the doji you see on the S&P 500. Now, someone is asking about the MTI. I can't put it on that one. Let's do it.
So we talked about the MTI a little bit ago. So
there's the graph and there's the MTI. The MTI, when it gets to a level, is cast on a scale between 0 and 2. This is for the benefit of the people who are not part of the system of VectorVest. This is our market timing indicator, cast on a scale between 0 and 2. Above 1 is favorable, below 1 is unfavorable. This tells us when the market gets to a level of being overbought or oversold. When the MTI gets to a value of 1.60, we're saying the market is starting to look for a top. And we're not there yet, but we're getting close. So I think that this is also another sign that the market could be at a point where it wants to turn over, even with the news that comes out. So it ain't selling fear. It's giving useful information to get you guys prepared. That's what that is. Ain't got nothing to do with fear, bro, at all. It ain't got nothing to do with fear. Question came up, Patrick. Do we hit 430 then pull back?
Let me get my crystal ball out and just take a look real quick. It tells me to ask again in a little bit.
Okay. Wow, there you go, Jim. That's a great answer, Jim. That's a great answer. VVC is also arithmetically average. It is an indexed arithmetic average. That's what it is. It's an indexed arithmetic average. Good gravy. We're approaching resistance in the VVC. Put on the support and resistance and take a look. This one is on the VVC. Let's go add support and resistance. I already got support and resistance on. 6 month, there it is. It depends on what my levels are on my support and resistance.
It depends on how many candles you're looking at as well.
Let's do this. Do this real quick. Change the settings. What would I change it to, Patrick? I would
300 bars. That would be about a year.
Yeah, I don't want
250 trading days in a year.
Well, we could do 300 bars.
So 300 or 150. 150, 6 months.
There's the 300 bar, and we're at a level on the looking back a year's worth of candles. We are at a level of resistance of 58.27. Another reason, and look at that, another reason why the market could be turning over. So all of this is nothing to do with fear. It's all about giving you the right information you need. All right, and Ravi, no. Again, if you want us to analyze those stocks, I'm going to put out another post today, right after this session, and ask you guys what stocks would you like for us to look at for next week.
And 9:30 a.m. on Wednesday morning is the cutoff for new requests.
There you go. All right, because we have to have a chance to take a look at them. All right, so that's from a market timing perspective. I'm going to close out of the graph. All right. Fastest moving sectors. I don't know if I want to do that today. Let's go stick with, before we do our own picks, let's go do the customer picks. You want to take yours first? You want me to take mine first?
I don't care. You got to take yours last time. I'll take mine first.
This was their picks last week. Let's go see how they worked out from last week to now. These were the stocks that they wanted us to. You guys gave us a lot of stocks last week. All right. And let's go do a quick test of them all. Look at that. You guys had us look at some good stocks. How about XPEL, Volta? Look at that. Energy, are you here? How about look at that? They did well. They beat out the market. Only 3 stocks went down, ORC, DRV, and BNKD. You wanted me to there it is, Ravi. We looked at BNKD last week. We talked about it. It was down over the week. All right, so just these were your stock picks. You gave us a good amount of picks for us to look at last week. This week, we only got 4. This week, we only got 4. We give all of you an opportunity, and let's go stream this. We give all of you an opportunity to give us stocks for us to take a look at. What does turnover mean? The market may be turning over, just like turnover. Something's going up. It doesn't
go straight up, then go straight down.
And then turning over, moving down, rolling over, going downward.
To switching to going to down.
Okay, so I mean, if I sounded like a jerk in answering that question, I thought it was kind of self-evident, turning over. So, and if I didn't make that clear, I apologize. Hopefully that answers your question. VVC composite really helps me not to fear. There you go, Stowe. That's what I'm talking about. And I like hearing that. And also, David said, good for Boeing on Facebook. And Stowe says, until the airship hits the ground. Oh boy. I'm hoping that Boeing can get around some of this stuff and really start to sell their planes. All right, I'm going to do my 2. Fui Films, and I looked at that. That was one of the stock picks that came out. First off, it's a little bit overvalued. Doesn't make it a bad stock. It's got decent upside potential. It's above the value of 1, so it should outperform a AAA corporate bond over the next 1 to 3 years. Relative safety is below 1. I say that this makes it more of an aggressive play. Positive earnings growth. What do? They make the film that you pack stuff in, like over chipboards and stuff like that for name tags. So they have it's a plastics firm that produces the film that goes over a lot of different things. The only thing that I saw is that they joined with another company. I couldn't find a whole bunch of news on it. The InfraCap ETF, I do like that. And that is in the sector energy, sort of like a WTI or what's the energy ETF?
XLF.
XLE. Is it XLE?
XLE or XLF, I think.
One of those. So it's another ETF on energy, which I'm still bullish on nonetheless. So Patrick said, he said, how many stocks we got? I got 4. He says, what stocks you want? I said, I don't know. He says, give me the top one and the bottom one. You take what's in the middle. So that's pretty much what we did. Not a chemical stock, Dan. Like the actual film, I ain't got nothing. I just ordered a whole bunch of Amazon today. Don't tell my wife. I got nothing that's in a film, but that's packaged in a film. So I don't call it a chemical stock. It's not like that. I don't think it's a chemical stock, but it's designed for that reason for shipping. All right, so I'm going to take a look at both of these graphs real quick. The ETF, what I'm really looking for on it is where the RT sits. It's above 1, so it's in an uptrend. Let's view the stock graph. Let's go put this on a 6-month graph. Look at the move on the chemical plastics. All right, so it says chemical stocks. I mean,
if they make plastics, they have to use chemicals, so that makes sense.
But it ain't a chemical-less thing. I guess they do have to use chemicals, but it's a plastics that you put over stuff when you ship, that kind of thing. But I hear you, Dan. I hear you. I know, but take a look. I know the chemical stocks in the future. Oh, is that what you're saying? Let's do this. Well, let me go look at this graph first. I do like the move over the last 6 months, definitely hitting a new 3-month high. I'm really not feeling the volume on it, though. The volume is just not making me feel warm and fuzzy about it. And then here's the energy sector. I do like the move up. It's sitting in a channel. I also like that the 3 and the 8 just crossed, but it's got headwinds right now, sitting right at that level of resistance of $31. I'd like to see it break up above that. I think that I got a price target sitting at about 34.28. That's a 6-month high. RT is above 1. Volume, I'd like to see a little bit bigger, but I do like the cross. And notice, the last time the 3-8 crossed, boom. And it went through 2 levels of resistance. The 3-8 crossed today. And let's go see if it's got, I do like the upside, and I like that it's an ETF. Now, talking about the plastics, let's view the industry graph on it real quick. So all of the stocks in that space, do I like it? 6-month graph. Do I like it? Son of a gun. I ain't feeling that. Well, it's in a channel. I don't know. I think that this could be a one-off. I do like the 3-8 crossing on the industry. Industry's got a high here, or a level of resistance at 60.86, is trading at 54. It's got some move. It does have some move. And maybe this is one of the stocks that's pulling that industry higher. The 3 and 8 is just crossing on that as well. All right. Patrick, do your 2, and then we're going to do our picks.
All righty. So I get the very top one and the very bottom one this week. So first stock I had was Marathon as an oil play. You know, once again,
sorry, Patrick. I was trying to answer a question, but I forgot you got the mouse. Go ahead.
There we go. So I mean, we've stated our thoughts on this time and time again, but basically, you know, oil is a great area to be in. Just, you know, it's having a pullback after the big run that we've seen so far this year. Once things sort of balance out or sort of, you know, seem to come back to the mean, then that could be a good time to add in some oil stocks back into it. But once again, you know, with all the craziness going on in Europe right now, coming into the winter months, there is a lot of concern, or, you know, this could literally be one of those trades where you're taking a risk on expecting oil prices to continue to climb. And I mean, oil prices have that justified reasoning of, you know, if something happens over in Europe right now, all of a sudden we wake up the next day and oil's skyrocketing to $150, $200 a barrel. Now, that could also go the exact opposite way of, you know, things all of a sudden subside. Everybody starts shaking hands, comes to the table. Oil prices start going down because everybody's not worried about the oil supply chain dropping, or, you know, or getting pressure on it again, if you will. So there, all of a sudden, Marathon Oil starts going down with oil as a whole. So it really is a coin flip, and all dependent on what goes on in Europe. But with the economy slowing down, you know, that's hurting oil prices currently as well. So there's a little bit more bearish sentiment, in my opinion, on a short-term basis for oil than there is for bullish sentiment. But at the same time, that could very easily change. And that's a great thing about Marathon, is it does pay a dividend as well. So it can help offset that time. But I wouldn't really look at entering in until it's, you know, started getting leveled out, if you will, or starts slowing down with some of the bigger swings that we've seen. Then at that point, you know, you jump in if it's in a more consistent trend or even a sideways move. This dividend here of $2.32 a share, or 2.4%, will help cushion some of that blow of that short-term sideways channeling or sideways move. So I definitely like that aspect of it. Also, the dividend safety is higher, so, or telling us that, you know, the dividend is consistent and there's not a whole lot of fear for getting in and losing out on that dividend. Now, on the other side, speaking of dividends, on the other stock that we have, OHI. OHI has a dividend of 2.68 or $2.68 a year, or annualized, or 8%. Well, that sounds good and that looks attractive, but when you look at their earnings yield of 4.92%, that earnings yield is well below that dividend yield, which means that dividend is not sustainable and most likely will have to be cut back or start heading south in the very near future. So that brings me a little concern with that one, as the dividend is very risky on OHI. But now when we get actually into the analysis, scrolling back over, there we go. Starting off with Marathon, this stock is undervalued, which, as always, VectorVest advocates buying undervalued stocks. But then we get to the 4 indicators, the RV, RS, RT, VST. All of them are cast on a scale of 0 to 2. And Marathon definitely wins the cake with this one. RV, or long-term potential, is well above 1, telling us really good long-term potential with this one. Less risk associated with it, healthier balance sheet. Timing, though, timing is the issue with this one. Right now at 0.97, it is slowly moving lower. Therefore, right now is not the time to be long in it. Good stock, good fundamentals, but once again, timing is the most important factor, and timing right now is not in favor of this one. Whereas on the other side of things, we look at OHI. This one is overvalued, so you're paying a premium to own this stock currently. The long-term potential of the stock is poor. It has more risk associated with it than the average stock out there, but this one isn't an uptrend right now. So, you have a fundamentally sound company that's slightly moving lower. You then have a speculative stock that is moving higher currently. So you really get 2 ends of the spectrum here with these 2 stocks. We pull them up, take a look at the graph of these. Where is it? There we go. Now, for anybody not familiar with it, OHI does mostly medical equipment. So they do lease agreements and basically provide capital to medical providers to help them cover their costs there. So it's in a solid space. It reminds me reminds me of a similar situation to Upstart, where it's a AI automated financial service. Not a whole lot behind it other than that. So you are taking a lot of risk here associated with it. But at the same point, it is in a nice steady uptrend. You have a breakout of resistance. Let's go ahead, use this here. Horizontal line or cursor. You have a breakout of resistance right here at, what is that, 30, 31 and some change.
Yep.
RT is steadily moving higher. That's a positive. But the thing, and on on a longer term basis as well, when I find my chart layout here,
It's there.
I know it is. I found
Okay.
it last week, but there we go.
Look at that MACD.
Yeah, the MACD was what I was getting ready to point out here. Just got to take off the DPO. Everything's really tiny on my end, trying to control it on your screen, so makes it kind of harder. There we go. When we look at the MACD, we're seeing weakness showing with the MACD. MACD was hitting lower highs here, but at the same time, higher lows, showing some consolidation, some sideways movement. Then when we broke out of that downtrend on both the MACD and the price, stock ran up. So this is a speculative stock. It has a lot of risk associated with it. If you're getting in for the dividend, be careful with that. It's not sustainable. But I mean, from a minimum standpoint, from a swing trade standpoint, yeah, stock's in an uptrend. Everything's moving in favor of it. I like the trade, but from a longer term investment standpoint, especially when you're considering REITs, I think there's better opportunities out there. So that's going to be it for the first one. Let's go ahead and take a look at Marathon. Once again, Marathon did have an RT below 1. So therefore, regardless of what the stock or the chart shows us, right now is not the time to be long in it. Looking at the chart, however, we can see that big sell-off coming into it right around the beginning of June. Starting to see a double bottom here, bouncing off that double bottom. I like this trade if and only if we can break above this resistance here.
Amen. Hallelujah, brother. Pray.
We came up, hit that level of resistance, pulled back, retested support down here. Now bouncing off and trying to retest that level of resistance on a second time to see if we can break. If we can't break above that point, then I would simply say still hold off, wait for the opportunity to come to you. Don't try to chase it. Don't feel like you have to add it at this time. There's no need. It's not necessary. There's no need to. But on a positive, one thing I will keep an eye on, though, is the MACD here at the bottom. MACD, no surprise, off of that double bottom, starting to pick up. And on a longer term basis, both the MACD and a signal line crossed above that neutral territory of 0, indicating a new longer term uptrend starting to form. And I like seeing that. But once again, I need to see confirmation of the uptrend from price action. So therefore, I need to see it break out through that level of resistance, and that would push that RT back above that level of 1, therefore fixing all the things that I have an issue with at this time with it. So, thoughts?
I like the both of them as short-term plays, but I like the idea of waiting for confirmation if you're not in it. If you are in it, leave it alone. Even on end of day, the 3 never went below the 8. And if you're not in it, wait for confirmation before you pull the trigger. I like both of them actually. I like how you analyze this, that this is more of an aggressive trade because it is. All right, there's no ifs, ands, or buts. It's more of a speculative play that's going up, whereas this trade is a more solid stock that's got an RT below 1. 2 different sides of the spectrum, but possibilities. I'd wait for MPC, but on this one, I'd be careful. Because it is a speculative play.
Yep.
All right. Last thing. Let's go look at my picks from last week. We'll start there. Let's go back 1 week. And then I'm going to briefly go through my graphs. These were my picks last week. Let's see what they did. Good. Googly muggly. They got smoked like a pound of bacon, baby.
Oh, did you go long
No.
HKD?
I didn't go bullish. I didn't go bullish with HKD. I said to stay away from that.
So you would be making money.
Oh, I would be. Oh, I'd
if
be
you were
making
short
okay,
HKD.
yeah.
If you could actually find shares to short it,
I wasn't bullish
that
on
would have been
HKD.
a great trade.
I wasn't bullish on HKD, but I was bullish on my other stocks. There's oil. The semiconductor chip didn't work out. All 3 of these were semiconductor chips.
Yep.
Ford and there's HKD. I was definitely bearish on HKD.
Then that would have easily offset everything else.
Absolutely. So I actually would have outperformed the S&P too. All right.
Oh yeah.
Ooh, I looked at that and was like ready to puke a little bit. But now I had to go back and say, not so bad. Man,
am I really as bad as Kramer?
Are any of us taking the trips to the Bahamas? Yes, we are. Before we go, I'll show it. All right, here's my picks for this week. All right, here's what the stories that I had for this week. We'll stream it. And I'm just I already talked to you. Oh, this was the stock that I'm looking at. Hey, don't look at this stock. All right, this is a speculative play on my part. So don't look at it. I'm taking it out. Before somebody's going to say, hey, what was that ticker symbol? I'm not telling you. Go back and look at it on the replay. But that was something in my head that I'm thinking about. All right.
Pump it.
I see. That's just why that's so why I didn't want to show that. That's something that's going on in my head.
The stock and it's okay.
Whatever. All right. So 4 out of my 5 stocks are up today. Plug after even the miss. I still am comfortable in the space. Workhorse. Did I not show a story with Workhorse? I did. I thought I did. Anyway, that's in my list. Boeing. That's the one that Joey took out accidentally. And then the Walmart story. All right. Let's go take a look at these graphs. I want to get to.
Wait, you don't have Palantir on the list?
Not this week. Shut up.
I figured you would at least have that one in there since it actually had news this week.
It did. I tweeted the news. It's on my Twitter. If you ever want to follow me on Twitter, it's at Glenn. Go search for at Glenn Tompkins Jr. on Twitter. And Patrick's Twitter is PR France 88. Yeah. So I tweet a lot of stuff that we don't even talk about here.
Glenn's a twatter.
So I'm not saying nothing that's going to get us kicked off. I'm not saying nothing. It's a Twitter account. That's all I got to say. Plug, even after the miss, look at the move. All right. Big volume, big move. This is Patrick's crappy graph. So let's go to, which one do I want? I want the trade graph. GTRJ. There we go. Trade. All right. Still have the 3 and the 8. I have RT and I have volume. I like the play. I still like the play. 3-month high on good volume. I like the play. Workhorse. Workhorse got in a deal with somebody. That's why it was a story. I forget who it was. Dang it. The news, big up candle today. Watch the 3 and the 8. RT went back above 1. Volume is okay. I'm sorry, but I forgot this. They got a deal with somebody for building in their EV space. Dang it. I hate that I forgot the story though. Boeing. I like the steady move up on Boeing. All right. Slowly but surely getting back into people's good graces. I do see that right now. Oh, man, I can't hit the drop down arrow because your thing is there. Can you move that? Can you move your mouse? There you go. There you go. Now I can use the drop down. Sigh. I do have a level of resistance on it, though, sitting at 171.89. If I'm thinking about getting in now, let's see if it can go 12 cents higher than the high. All right. That's Boeing. Devon Energy, they bought out a company sitting in a little bit of a channel. The 3 and the 8 just crossed today. Volume is okay. RT not above 1. I'd like to see it get out of its own way, though. And Walmart, I don't think that the whole streaming thing is, I'm with Patrick. I don't think that that's going to be a real big thing going into the future. Before Patrick gives his picks, let's go look at the portfolios, my portfolios. The Bahamas trip 2, we're up $642. There you go. There you go, son.
We got half of a plane ticket.
We got us. Look at that. This is the automated system. This one is the I hands off. This is a fully automated system that's trading on its own on 10,000. And then the first one, which wasn't it's still automated but different search. It's down 3.5%. But the Bahamas trip 2, look at that. And for those of you on Trending Thursday, I always give you some speculative picks. 41% since January of this year. A lot of my speculative picks come from here. There's ARLP in that list too. All right, let's go back to viewers. Let's go to Patrick's picks last week. Patrick, all I'm going to do is set this up to quick test it, and then you go do the rest of everything else.
That's fine.
So this was Patrick's picks. He had Feng Yu, Robinhood. Were you bullish or bearish on Robinhood?
Bearish.
Okay. Raytheon.
We didn't really look at the chart. It was more of a news-driven thing.
Okay. Look at that. Everything made money except for Raytheon. And and Senseonics. Nice move on Senseonics. I like that stock. Robert, you're here, aren't you? You're here. Senseonics, nice move. Nice pick last week, my friend. Hood was actually up. Feng Yu was up. Only Raytheon was the only one that was down. So let's go take a look at your picks for this week. Let's stream it. Take it away, bro.
Yeah, so I got 4 stocks for this week. Celsius Holdings, which is a top VST stock. Also, for anybody who's been tuning in for more than today, you know that typically I have my standard Red Bull here that I'm drinking most of the days. But I have recently found the new, or the Celsius energy and whatever else, fit drink, whatever they call it. So I'm trying to give it a shot, and honestly, it's not bad. From somebody, who doesn't drink coffee anymore, who mainly drinks, energy drinks, this actually isn't that bad. So after trying the product, it's not bad. I like it. And like Dr. D, or like one of the first things that Dr. D, teaches you when you start working at VectorVest is, the easiest way to get started in the market is sticking with stocks of companies that you use. So therefore, if I'm going to be using it, might as well look at adding it to my portfolio. Now, when we look at the chart gives us a little bit of indecision right now. But, from the product, trying it and using it, I like the option. I like the play. It's a top VST stock. It's been there for a little bit. May take a little bit of a breather in the near term. But, if it works, then, yeah, I'm all on board with the Celsius Holdings.
And I know you already know what's pushing it is Pepsi took a big stake in it.
They?
Yeah, Pepsi last week, Pepsi took a big stake in it, which is really starting to push the stock's price higher.
Well, there you go. Then I got two biotech companies coming from the news that we were talking about with NVAX or Novavax. Novavax missed, so bearish on this one. Another option that I was looking at is one that most people continue to push right now. Seems to be a positive news story, but I'm going to take the bearish stance on that, and that's going to be Veritex. And last but not least, my third one is going to be the ETFs we were talking about over the last few weeks, and that is TSLQ. It's a 1-to-1 contra ETF on Tesla. So you buy it just like any other stock, but as Tesla goes down by 1%, this goes up by 1%. With the news coming out right after the split, everybody was really bullish on Tesla, especially with the split coming up. But at the same time, you also now have the news that Musk is dumping $7 billion worth of shares on the market. And we know what happened last time Musk started dumping shares regardless of what excuse he wants to give you, he's dumping his shares on the market. And last time he did it was the start of a major decline in Tesla. So I'm going to take the bearish stance because he's dumping shares. History has a funny way of repeating itself. Well, we already seen the first part, so therefore expecting to see similar results with Tesla going down. So therefore, I'm going to take the bullish stance on TSLQ. So when we go ahead and graph these here, then pull them up. Let's go 6 months. So with CELH, the reason why I say it's, seeing some mixed signals right now. You had this high here, it's pulled back. The 3 and the 8 are still positive. It's trying to make a rally here today. It needs to close in the upper 50% of that range. If it can't, then obviously I'd be looking to see how it retests and handles these lows here, and looking at taking a bearish position if it breaks below that point. If we can close the upside on today, then the 3 and 8 are still positive. The RT is still moving higher. Maybe consider it taking a look at it from the long perspective here. But with today's action, what we're seeing right now definitely gives us a little bit of hesitation. Moving on to the next, VRTX. So this one, even though it's been a nice steady uptrend, I'm going to take the contrarian play. You have a big down day here today after this big run up. Glenn has his layout, so I got to switch that back. Where is it? Come on, there we go. Getting that back up. MACD is giving us a bearish divergence. This price is hitting a new high here. MACD is actually hitting a lower high. And actually, when you look back even further, you still have more evidence of that bearish divergence. So just to use the freehand line, for anybody who can't tell this, you have higher highs here. Over that same time frame, you have lower highs with the MACD, indicating that bullish uptrend is starting to dissipate. And then when you go try to do a Google search on it or look at the headlines for VRTX, there's nothing about the company specifically, more about its competitors, or more just a whole bunch of, really positive articles that make everybody want to go ahead and buy it. And so it seemed a little suspicious to me with some of the articles that don't really have any substance. Just, oh, this is a great company. Trust me. The numbers look really good. Trust me. If this, and this, and they don't actually back that up with any actual data. So I'm going to take the bearish stance on this, at least for the short term. If you're somebody who trades options, this could definitely be an interesting put candidate. That was really my my thought process behind looking at this one. Is this would be great for an options play looking at a short-term pullback. So I like this from a bearish standpoint from where it's at right now. Then moving on to the next, TSLQ hasn't been trading that actively. Once again, it's a contra ETF, so basically you just look at Tesla's chart. If you think Tesla's going down, this is a good one to add to your portfolio, because this will go up once again by 1% for every 1% Tesla falls. So I like this play if you're not wanting to short Tesla, but you want to either hedge a long-term Tesla holding that you have, or you just want to play the down move to Tesla without having to have margin. This is a great opportunity to look at. And then last but not least, NVAX. NVAX, as we all know, gap down bigly here over the last few days. Right down below this support, support here. I got to turn off the freehand line. Come on. There we go. Let's see, 30, what is that, 41.52?
41.52.
All right, so right now, I'd be keeping an eye on that support floor. We could see it try to rally back, maybe, but with negative earnings or negative publicity going on, I'd expect to see this continue to move lower. So get into it now, or get into it as long as it stays below 41.52. And then therefore, your max loss or your line in the sand would come all the way down here to the high of the gap down day, right around 44.60, 44.50 or so. So I would wait to make sure that it's closing below, once again, that support resistance zone at 41.52. Once it does that, that's when my entry would be. And then my line in the sand would be at the 44.50, 44.60 range. And yeah, that's going to pretty much be it. Those are going to be my stocks for the picks for next week.
All right. So we covered a lot of stuff. So you know what I did? Just so that everybody knows, I already put the post up there about your stocks for next week. It's already up. So make sure you go look for it. I think, do you have to be a subscriber in order to see that, Patrick? Or no?
I don't know, but
Okay.
hey, that's just one more perk of being a subscriber, right?
All right. But it's up there. The post is up there. You just type in the stocks that you want us to look at next week. All right. So that's already up there. Put us on our last screen. Folks, we covered a lot of material. Somebody asked me and said, is the market ready to drop next week? Pay attention to the content we put on the channel. Patrick and I put a lot of content on this channel. You want to know? We keep you in the know. Follow us on Twitter. We put a lot of stuff out there on Twitter as well. So, Stowe says, I'm a subscriber. I'll find it. It's already out there, folks. So, all you got to do is put in your stocks. And we will try to level it out to about 5 stocks a piece. If we get enough stocks, we'll only do about 5 stocks a piece. So put your stocks in there you want us to look at for next week. All right, I'm tired. Even though I had coffee,
you're
I'm
old,
tired.
so that makes sense.
Wow. You hear that, Joey? He called me old. You know what I'm going to say to that? How come my thing doesn't work? Nobody heard that. Did anybody hear that? No, it's not. You broke it.
You realize you're not helping your argument, right?
You know something?
Everybody can hear you out there.
I'm going to sit still and I'm going to let you finish it out today. That's all. I'm going to sit here with my old man grumpy face.
All right. Yeah, cross those arms. There you go. Yeah, look real. You kind of look like the pout pout fish. All right, so thank you everybody for hanging out with us today. If you've enjoyed today's stream, as always, make sure to smash that like button right now. We've got only about 50% of people hitting that like button. So if you guys didn't like it, then hit that thumbs down. I don't care. Hit one of those. Pick one, up or down. Either one.
You better not hit the down button.
Hey, if you guys want to dislike it, by all means, hit that down button as well. But regardless, if you want to join in and you want to see your own stocks analyzed as well, make sure to hit that red subscribe button. If it's red right now in the bottom right hand corner of today's video, then you're doing something wrong. You need to hit that red button right now. Also, tomorrow, just a heads up, we do have a brand new watch list to reveal to you guys for our mobile coaching session.
Nice.
So if you guys want to see the new watch list and you want to see how to really utilize the VectorVest tools to be able to maximize make your decision process even easier, join me at 11 a.m. Eastern, both on Facebook and on YouTube, as we bring that new watch list to you guys. And then if you guys want to hear more of Pout Pout Fish and his negative sentiment on everything and his selling the fear, then head over to Trending Thursday at 2 p.m. Eastern, where he gives you all the bearish news that is driving the markets lower. So make sure to head over to those good times, and you guys can hang out as a community. So with that, thank you all for tuning in. Thank you all for hanging out. Until next time, take care, adios, and toodles.
See ya.